Now, stock of the day, Suncorp. It's reported natural hazard costs in line with guidance, saying the last financial year it dealt with 35 separate events and more than 120,000 natural hazard claims, an expected cost of around 1.1 billion. The company saying changes have been made to its reinsurance strategy following elevated natural hazard activity in recent years. Now, of course, this comes as we've just had the latest flooding event in New South Wales and to an extent also in Queensland with flooding again hitting those communities. So you see that's yet another hit to come. So Gaurav, how are you looking at Suncorp at the moment and I guess more generally with the insurers?
Andrew, I think insurance are probably some of the hardest businesses on the market to analyse, and I think too many people make the mistake of watching the share prices and trying to pick when they're cheap or when they're dear based on share price movements and not watching the underlying business, which I challenge people to actually go through those accounts and explain what is going on, because these are so opaque and there is so much discretion in the way they report their income. It's very hard. So take Suncorp, for example. They have a whole bunch of reinsurance contracts, the details of which we know nothing. They could be well-written policies, they could be poorly written policies. We know nothing about them, but we do know that they're very important to the underlying result. Now, there are trends going on in insurance which I think are interesting and important, and one of the two main ones are that clearly their investment books are yielding a lot more, and their underwriting profits are probably turning, so that they're probably making more money on their underwriting profits, and they're probably making more money on their investment books. And that sounds like a very good thing, but in fact what that does is spur a lot of price competition, and I think we will see that coming through. So I would just caution, these companies are going to report some good results. I think the pricing environment is quite attractive, but this is a very competitive industry, and that competition is going to be intense, especially when those investment returns start pouring in a lot more cash than they have been doing over the last 10 years. It's an industry I generally avoid because of the complexity, but this is an okay business, I would say. Look, if you want to be there, I see no glaring reason to buy it or to sell it. I have no strong opinion on it, except to say that this is overly complex for the amount of return you're likely to receive, and on a risk-reward basis, it makes very little sense to me. So I'm going to avoid it. But there's no bombs that I can obviously see, and neither is there a glaring opportunity here.
Okay, all right. Yeah, Mathan, in fact, I just received my renewed premium for my home and content. I had to look at it twice. I think that can't be right. It's gone up 30%.
Inflation.
Oh, Andrew.
Welcome to inflation.
The trick is to do it again. You don't just pay the premium.
No.
Apply it again.
Yeah.
Time to burn the house down and collect.
Anyway, of course, I did actually change insurance.
Good on you. Yeah.
See, most Aussies don't. We're a lazy lot.
That's right.
Yeah.
Well, we're lazy when prices are low. As they start rising.
No,
But
I
actually
am a
people don't pay
relentless
attention.
churner. I really am. Yeah.
There's only a few people who do that.
Yeah.
Majority of us, we big four banks know that,
Yeah.
and that's why they take us to the cleaners. And because once you're in, they can keep jacking it up, and we just sit there and take it. And the interesting part about Suncorp is it's part insurance, part bank. They're trying to divest the bank. Now, for me, it's two sectors that I find in a different part of the cycle. Banks are, I think, a bit overvalued. They're probably going to under-earn into the future. Everyone looks at it as a yield play. I think one thing we have learned with banks and miners, when people start saying it's a yield stock, usually that's the top of the cycle, and then you start losing yield. And we're probably there for the banks. Insurance is on the other side, and Gaurav's right. The premium cycle is in their favour, and the yield cycle is in their favour. Yes, it's a science project, so I rely on really weird dudes who actually cover this.
Yes.
Yeah, the weirdos.
The insurance analysts are an interesting bunch.
It's not sexist. Guys and girls who do it are real weird people, actuarials. And the smart ones who do it, we look at what they're seeing on a relative basis. And the valuation is pretty good in that context. Most of them seem to be pretty good. Now, if you look at most of them, so we've been fan of IAG and QBE in that cycle. QBE's done well. I think it does like a decent profit upgrade every 10 basis points. IAG hasn't done much, but the market has dropped in the last 6 months, and IAG has pretty much gone sideways. So in that context, on a relative basis, it's actually done better than the market. So I think the sector is okay. But with the Suncorp, you've got the bank and the divestment. That's where people are getting interested in. I think it usually gets priced more like a bank rather than insurance.
That's right.
So I would say that it's probably over-earning on the multiple in the cycle that's going to be. Regional probably has too much in it. Queensland, weather damage, all of that will play out.
Yep.
So for me, Suncorp here, I'm negative on the banks, and I think that's more bank than insurance, so I'd be selling out. I'd actually look at, if you're looking at the insurance play, I think IAG is better turnaround story in that insurance play because it's much cheaper. And IAG is going to be around when I'm dead, so it's not going to go bust. They manage risk well. So in that context, I think you got to look at the relative valuation. So if you're going for insurance, I think you get better play in IAG.
Okay, all right. That is Suncorp. Let's